No, you come in the middle. Yeah, correct. Yeah, yeah. Okay. Resend it. Done. I know. So, Abhiram? Yeah. So the format we'll use is I'll start off with two questions to you, very opening questions. Then I'm going to ask them to ask two questions each. Then I'll come back with one or two questions. Then they'll come back with one or two questions. You can ask questions at any time. Okay. And then we'll come to some Q&A with the participants, more in person. Because online there is still some changes that are happening. So okay, so hi, this is Sanjay at Vienna, and we are going to start a talk on IFSC and AI, and we have some guests from IFSC Authority. So Joseph, who's CTO of IFSC Authority, and somebody I know for I think about 5 years now, and somebody I've got to know. I think as if it feels like as if I know him for a very long time, given that we have a lot of shared interests. We also have I have two co-panelists with me. Kaushal Sanghvi is head of product at Razor Pay X. Okay, was he's also doing a lot of work on AI, and that's why he's here to talk about tech AI and other stuff. And somebody I chat a lot about AI and AI study groups. We have some people from those study groups here who are trying to learn AI. And Kaushik is a value investor, somebody who's been in the financial markets for long and understands, the broad swaths of changes that are happening in India in the context of our history. So that's kind of, his special lens, and also about future. And he's a very, very hardcore value-driven investor, so he doesn't get swayed by the AI and the talks like that, right? So we have an interesting mix. So the way we had thought we will position this talk is sort of. Sorry, I'm just looking for. Yeah, so we thought we'll combine this in a theme called Innovating India, AI, IFSCA, and the path to $10 trillion economy. Okay, so I just want to make sure that we connect everything to the broader, bigger picture. And the idea of this talk was to sort of have a discussion within the industry veterans, along with the regulatory innovation leaders, to sort of understand both the AI integration in the wider society, IFSC's evolution, and the cross-border regulatory collaboration, which I think you have been at the forefront of. And we want to discover how India's unified financial authority uh, and the startup ecosystem are setting up the pace for the next wave of global disruptions, or we hope to, at least. Right. So I'm going to start with a couple of questions, opening questions, and then I'm going to pass it on to the two co-panelists to ask their questions. We'll primarily direct questions at you, Joseph, but please feel free to ask questions. And the audience, both in person and online, if you have any, please feel free to raise questions at the end, which we'll have some time for Q&A, and then after that, some time to mix around, chat around, refreshments, etc. So let me start with my, sort of where we are today. I think it's a very interesting time today because, and just to open up with something which is not at all technical, I think I'm fresh from watching a match which was truly, in my mind, historic. The Women's World Cup, India won for the first time. I think some people think it is like 1983. I feel it's beyond that. That's one development that happened yesterday. And second was India also launched the heaviest satellite so far. It's still not like the Falcon heavy, I think, but I think we are getting there in some sense. Given your special interest in space and so on, I just thought we'll start with your views on where we stand today as in the context of these and other such developments.
So thank you so much for having me here. Um, it's a very interesting start with cricket and space. While we are talking about IFSC and tech and investment, uh, I want to make it a very long answer to it because we're talking about India. Answers are always going to be long. A lot of things to say, but in short, if I have to tell, right, uh, India has arrived. Right, it's not the India where we had doubts, where we were timid, where we waited for others to give us an opportunity or to show the way, right? We are kind of getting into a rightful place, doing all the right things, making all the right noises, so that we are getting heard as well. And I'm saying this from my very personal experience. He know that I was in Amsterdam a few days back. Uh, this was at the Central Bank of Netherlands, DNB as they call it. So, like RBI here, we have a central bank for every country. So, there was this meeting of all regulators. So, we had about 30, 40 countries coming in for that. And there were many sessions. And there was one session on emerging markets and developing economy. I was part of it, representing India, giving talks. I know after that session, there were at least representatives from 8 to 10 countries who came to me and I said, "We are just blown over." All I did was talk about India stack, nothing much. And I talked about how we are building the layers and from not just UPI, I was talking more on ULI to the insurance part, what we're trying to do, because most of them were insurance regulators. So like I said, we have arrived. That doesn't mean the journey has not, kind of, we are all done and dusted. Expectations are high, and I'm sure the demographic dividend which we see here is what should deliver for us in the next 15 to 20 years to take us to the rightful place.
So maybe I'll hand it over to you then. Whoever wants to go first with a bunch of questions, either on the tech side or on the market development and every aspect of that India's journey for next, what, 10, 20 years, I guess?
Maybe I'll go first. So, thank you for this opportunity for being here. One of the questions I had was that typically people think that there are always first mover advantages in everything, but our own experience of the last 30, 40 years in telecom, in stock markets, in identity like Aadhaar, etc. Even coming in the end, we have learned from the experience of other countries. And though we started very late, we had an advantage in that. So, like, what are the advantages that we have coming in and taking this initiative much later than others have done? No, generally the whole IFSCA what is the advantage and what are the disadvantages, or whatever the late catch up, what is it we have to do?
Very interesting. So since you asked about IFSC, let me clarify my role as well there. So IFSCA, the authority, is a unified regulator, as he introduced. So we are the regulator for IFSC. So IFSC is the International Financial Service Center. So it's a geographical jurisdiction, and as most of you know, it's in Gandhinagar, Gujarat, right? So this is inside a place called Gift City, right? So all would have heard about Gift. So Gujarat's International Finance Tech City. So this was coined by the Honorable Prime Minister when he was the Honorable CM of Gujarat. So when they were trying to get the acronym going, they were figuring out how to make it, and it was the PM who told that at that point in time, please include the T, tech, because in future finance will not exist without tech. It will be part of it. And this was in 2007-8, you know, just probably in the cusp of the global financial crisis. So that's how the Gift name came in. And you need to understand Gift City. It's got a domestic tariff area, which is separate from an SEZ, the Special Economic Zone. And inside the Special Economic Zone is this IFSC. Now, people mix it up. They think GIFT City means all of it is IFSC, which is not correct. There's a specific area which is called IFSC, and that jurisdiction is supposed to be an international jurisdiction. So now, what do you mean by international jurisdiction? You can't do business in Indian rupees. The IFSCA, the authority, us, we have denominated about 15 foreign currencies in which you can do the business. Okay, so these are some fundamentals. I'm just saying for the sake of the people here, so that everybody gets the logic. So when you come there, you open a bank account. The account you open is going to be a dollar account, not a rupee account. Okay, so technically it's a jurisdiction which is outside FEMA. I'm not sure how many of you know about FEMA, Foreign Exchange Management Act. So which means in that jurisdiction, the regulator is us and not RBI or SEBI, IRDA or PFRDA. So through an act of a parliament, the powers of these four regulators were given to us. And that's why we were the unified regulator for that zone. So what it means is if a bank is setting up in that zone, it's not the RBI, but IFSCA which gives the license. Similarly, an exchange comes up, it is not SEBI, but IFSCA which gives the approval. An insurance company or a reinsurance company comes in, it's not IRDI, it's us who give it. Similarly for funds, PF and all the stuff. So with that context, right, to answer your question, we need to ask a very fundamental question ourselves. Why did we need an IFSC in the first place? Right, India has an economy which is growing, a lot of domestic activities happening. So that will give an answer to your question. So if you really see, there was a lot of talent and capital moving out of the country to offshore locations. So a lot of funds, if you see, are operating out of Mauritius, Cayman, BVI, I mean, you name it is there. External commercial borrowings, ECBs as they call, all of those were funded from probably Singapore, other jurisdictions. India is supposed to be the third largest aviation hub. Anybody here in this room who has not been on a flight? Please raise your hands. No, right? So that's the way the market is growing in India. Look at the airports which has come up. 20 years ago, right? So your Air Indias and your Indigos, they are kind of leasing aircrafts like crazy. You would see somebody needs 600 Boeings, orders have been placed, so on and so forth. So which means the market is here. But then tell me, what really happens is these airlines had to go all the way to Dublin in Ireland to lease these aircrafts. Why? Because our country was a closed economy. The rupee is not freely convertible, right? And it is not enabled here, aircraft leasing, right? So all of them are going to Dublin for a business which is thriving in India because it's been used by Indians, but the jobs are created in Dublin, the taxes are paid there, the commissions are made there for a business completely which is for India. You see certain things, so where things have gone out of the country. So this is where I meant talent, capital, and even in some cases businesses have gone out of our country because we didn't have a favorable regulatory regime or our currency was not fully convertible and so on and so forth. So that's when the government thought, okay, we need to create an offshore within the onshore. So onshore is the entire India. Let's create this offshore in GIFT City, call it the IFSC, make it an international jurisdiction, right? And then put in the regulations. So now, just to continue that thought on that aircraft leasing, like that, we have many business cases. What we have done as a regulator, our job is to create regulations. That's what our job is. So we created an aircraft leasing framework through which we started giving approvals for the leasing companies. Now they have come and set up in IFSC. They can do foreign currency transactions. And guess what? Today, your Air Indias and Indigos need not fly all the way to Dublin. They just need to drive into Gift City, get the job done. So, where are the commissions, money account, the jobs getting created? In India, in IFSC. So that's one example I'm giving. So that's the kind of change we are trying to do with the IFSC. A lot of things which has gone out should be brought back in, and all these are some of these are very new kind of businesses also, which India has not seen in the past. So that's where when somebody says a kid today, what will he become in 15-20 years? I don't even know the job description or his title description, which is very true because we are inventing new businesses to come back to country. So that's the long story short. As to the IFSC itself is on the forefront of this. Of course, we are focusing on finance, financial services, and technology to start with, because that is what the International Financial Service Center is. So a lot of things which has gone to other jurisdictions are slowly coming back here. So it's like a ghar wapasi, right? In fact, another classic example, which if you're following stock market, is Gift Nifty, as they call it. It was earlier called SGX Nifty. It was in Singapore. And what was in Singapore? The Nifty products, which is on our NSE here. And it went over there because here you couldn't do dollar trade. They could do dollar because the rupee was not fully convertible. Correct? So now we brought it back to Gift, because Gift has two exchanges, which are international exchanges where you trade in dollars. So now it is back. So like that, there are different businesses which we are trying to bring it back. I hope it gives a picture.
Yeah, so I'm obviously going to play a little more of the tech and the sort of startup questions. And I think what I'd love to learn a lot more about is how is IFSC and the authority, what is it doing to encourage both Western tech startups, especially? I'd love to hear, or even fintechs. Maybe we can narrow it to that. Come back to India or operate from India or operate with India, and vice versa. How is it also enabling Indian startups and Indian fintechs to operate more globally? And obviously, I think, for example, we were discussing this a little bit, which is a lot of Indian tech startups, fintech startups would automatically were advised very often to say, you should set up in Singapore, you should set up in the US, or you should set up in other geographies, was one thing. I think even as recently as a few years ago, is still very much the advice of choice, right? And on the other hand, you're seeing, some big names flipping back to India. But I'd love to talk a little bit, if you go much earlier stage and you're talking about something that's seed stage and those kinds of companies, how are we enabling them to do this kind of, operating globally much better? So I'd love to hear your thoughts on what's the kind of role you're playing there.
Right. So this is a very interesting perspective from tech, right? So this starts as a financial center. So continuing from your question to his, right? That's how the journey also actually happened in the IFSC. So when you started, you are competing with, say, the financial centers. Top ones are New York, London. Of course, we are not in that league. But then, of course, can we compete with Dubai, Singapore? So a lot of things happen. But slowly, as we do more research, we figured out that tech is something which is what is driving the finance world today, right? Be it whatever field it is. So I remember having a conversation with my former chairperson, Mr. Injadi Srinivas. He was the first chairperson of IFSCA, where we said, hey, we want to bring in tech companies into IFSC. Now, you should understand one thing. IFSC is a very regulated space. What I mean by regulated space is, without IFSCA, the authorities' approval or license, nobody can come and open office here. So, for example, today you're having a AI startup. You don't need an approval from a Reserve Bank of India or a SEBI or any financial sector regulator. All you needed is to incorporate it MCA, and you're good to go with all the basic checks and balances, right? To set up a shop.
But is advised against.
No, so but in IFSC, it doesn't work that way. While you might get an MCA approval from the company perspective and all, you have to necessarily get approval from IFSCA, the authority, us, to set up shop inside. The reason is, there's a lot of tax benefits which are given for companies which are setting in IFSC. So GST is zero, STT, all those things are zero. You get business income tax at 0% for 10 or 15 years, which means in a 15-year span, you can choose any 10 years, contiguous 10 years, and get zero business income tax. So probably the only zone in the country today where you get this tax rate. Okay. So that's why it's like a very regulated space. You can't just come in and set it up. So now as a financial sector regulator, we got the powers of RBI, SEBI. I told you the story. So which means the RBI Act, the BR Act, the Banking Regulation Act, the SEBI Act, all these things came into our IFSCA Act. Now all those acts don't have anything specific to create a tech company. They have provisions to license a bank. They have provisions to license an NBFC approval. The IRDA has provisions to license an insurance, reinsurance, SEBI has for exchanges, brokers, intermediaries, whatever that is, right? So there is nothing for tech. So if there is no regulation, I don't have the powers to give you approval. If I can't give you approval, the tech companies cannot come in. So it was a catch-22. You're getting? So initial stages, that's where we had a conversation. And then we decided that we need to have a new architecture here, a new terminology also. And I'm not sure how many of you have heard of it. We brought in a term called TechFin. So there was a fintech, and we said along with fintech, there should be a TechFin as well. So people were a little confused initially, like some of you are now, right? So what we said was a fintech is a financial institution who's using tech in a very efficient way. So what it means is you could be a cross-border company, payment services company. You're using tech to do it, move money faster. Whereas a TechFin is a pure tech company who services or provides products and services to a financial institution. Now there is a subtle difference here. For example, if I am a cybersecurity company doing services for a bank, or I am an AI company doing services for a bank, or if I'm a KYC, a digital identity company. Now, for me, they are a tech fin. They're not a fintech. And it makes a lot of sense because when you're not moving money. So I need not put the same lens of regulatory compliance on them as well. So you're an AI startup, right? What will you do with money laundering? But a cross-border fintech can do something with money laundering. So my lens on them, my requirement for compliance on them will be higher. Now, if I paint a tech firm with the same brush, the cost of regulatory compliance goes up and your profitability is going to come down. So knowing that, we created this category called TechFin so that tech companies can come in. And we launched a framework in 2022, if I'm not wrong, April 2022, called the FinTech and Tech Framework, where we had fintechs and tech fins. And we listed AI, Web3, blockchain, space tech, that's where the space links come in, and a host of such tech enabled for financial institutions. So that's the genesis of how we ensured GIFT, the finance and tech, is complete in that aspect. So today, if you are an AI startup who is servicing US clients, foreign clients, not domestic, you're more than welcome to set up, because the provisions are there in IFSC, to set up a company and take the benefit of the 10-year tax holiday. And what we did was, very recently, last July, this framework, we upgraded it to a regulation. So just for the uninitiated, the regulators start with something called as a regulatory framework. Then we upgrade it to something called as a regulation, because the regulation is a more stricter, stringent version of it. It goes through a lot of scrutiny, is at the end of the day placed in the parliament and all this stuff, goes through a board and all this stuff. So it has been upgraded to something called as TAS, TechFin and Ancillary Service Regulation, TAS regulation. So today, TechFin is recognized as an area, tech companies, and they can come in, get our approval, and be in business. That's what has happened over the last few years. All this is, TAS came in last July, so it's not long.
Have you seen companies take advantage of this already?
Absolutely. So all the big guys have taken advantage, of course. So your no, not that. So your usual tier one software services company. So Infosys, Cognizant, Wipro, HCL, they've all got the approvals, setting up their offices to hire people because they're focusing on BFSI, financial institutions, a lot of tech they're providing, core banking solutions and all. Intellect design is already there, they're ramping up. So there are about 18-20 tech fins today. Like we publish a bulletin every quarter, so we keep updating the numbers. It's there in public domain. And there's also an AI startup which got our in principle approval. They're trying to set up. They're servicing Africa and certain geographies. Like very interesting solution where they are using AI to ensure compliance is taken care of. And whenever a regulator updates a new circular, their tool automatically does it and puts that thing to a compliance manager saying this is what is the delta, please get it done. So completely AI driven, agentic AI kind of stuff. So everybody is joining the fold now.
Just based on what you've been saying, I have one question which is more on your CTO side, more than the IFSCA side a little bit. You mentioned a couple of times, you all are about 5 regulators all rolled into one, right? It seems like all of that there's one authority which is doing what there are 5 other authorities in India doing, right? For that zone, right? 4 authorities, sorry. That seems like a lot of work. How are you all using tech and AI to do what seems like maybe 5,000 people's work? And how are you all dealing with that? I'd just love to learn about how you all are harnessing all of this.
Interesting. So it's not just so CTO is it's not as per our grading or official thing. It's a title you're given. So ideally, I'm a chief general manager. So that's in any regulator you have a manager, AGM, DGM, GM, CGM, like that. So I'm a chief general manager. So we have responsibilities, right? One of my responsibilities is the fintech and the sandboxes. The other is on supervision part. So we also need to do supervision of some of these tech fins and other entities. Then there's a new division on data privacy, data governance, which we are created because of the DPDP and the rules which are going to come out. So that also is with me. And of course, the technology initiatives. Now, from tech perspective, what we are trying to do, see, if you need to understand that a regulator is not doing like any other commercial organization, right? We don't have sales to make. We don't have customers to track. So we won't have a CRM system, those kind of things. So you should understand that. So from a regulator perspective, what are the actions we do? We create regulations, regulation after regulation. Then we do supervision. The entity, are they following those? Anybody is erring and all. And then we do enforcement. If somebody's not listening after 2-3 times, you put some fine. You see a lot of things. RBI fine, so and so bank.
And also approvals, right? Like because now there's probably hundreds of
applications coming in. Yeah, that's a regulation part. So that's a regulation part.
Okay, so this is drafting and creating the regulation.
Right,
and there's also all the folks who are like saying,
yes,
I want this regulation, I want this, I want
yes,
that. And I think all of this take years sometimes, right?
No, absolutely. So that also comes under our regulatory teams itself. So that's where, like when you said we are understaffed, yes, absolutely, for all those things. So what we did was, from a regulatory standpoint, see, there are some nuances. I'm just deviating a little bit so that you understand the complexity. So now there is an entity in India which is trying to open a branch in IFSC. Now, as a regulator, I would want an NOC from the parent regulator. If you're opening a new one here and you're nowhere else in the world, that's fine. But let's say if somebody is coming from US, a bank, or a UK, I would want either the Fed Reserve or the Bank of England or whoever it is there to give us the no objection, because it should not be that they're coming and opening a branch here without their parent knowing. Similarly, from domestic, if they're coming, the RBI should give the approval for them to come here. So now, when a bank is making an application or anybody like this is making an application, our application is going to be a little complicated because there should be a provision to get this NOC from other regulators, right? Now, earlier it was all through email and paper. Then there is this provision to check on, let's say you come with your PAN number and other things. So I need to hit the income tax department to see whether the PAN is valid. I do not want some fake characters to come in because I take those to do the due diligence. Are you on any list which are banned by many organizations? I'm not naming anything, but I'm just saying you get the drift of what I'm saying, right? So like that, there are at least 7 to 9 different interfaces or integrations which we need with different entities. So what we did was we created something called as a single window IT system, SWIT as we call it, which is a unified place where everybody can go and make an application. It's a workflow you can track, and this goes to other regulators and other integrations and all those stuff. So we keep on adding new things to it. So that's the first piece. The second piece on supervision. So we are just on the process. We are initiating. The RFP is already out. We are shortlisting the vendors to build a supervisory tech system, sup tech system as they call it. So this is more about getting the returns every month from them. Can I put AI ML on top of it to see any outliers? Can I predict that this can be a fraud or this can go bust? So that's the idea under the SupTech. I'm not revealing more because some of the things should stay close to our chest than in public domain as to what we do in that. And for enforcement, we are yet to start. We are trying to create the business process flow as to how should it seamlessly flow, because that's a pretty straightforward legal process. Like you send a notice for them to give show cause to explain, and if they don't explain, then you put the fine and all this stuff. So there are like these systems which are coming in place, and of course the internal HRMS, that's also there, the ERP and all this stuff which is needed for any organization. So this is how we are looking at, but we are betting big on AI ML because the amount of returns which are going to come, it's going to be just humongous. So people can't just sit and map A equal to B equal to C and do all those logic.
This will be
Yes.
you have to find people who are round tripping or going through for hoops, etc.
Yes. So our plan is like we should also do social media listening. Like for example, it might sound crazy, but just giving you an example. Let's say there are a lot of buzz in the social media saying uh, in some area there is some scam going, some stuff is there, or a lot of customer complaints are being, grievances coming in. So as a regulator, there are three things which are very fundamental for us, right? One is financial stability, second is market integrity, and third is customer protection, consumer protection. So there's a lot of complaints out there, and if I can link from that social media to some of my entity here, or let's say there is a specific owner against whom they have raised a lot of things, and if that person is in my database as one of the directors of a company, I know there could be something fishy with the company itself because some of their directors are compromised, or it's a network analysis which you can plot and then see where the risks are. So there could be multiple things which you can do once you get these systems in place with AI, social media, the returns which come in, and then the other intelligences which we get from the standard fellow regulators and other bodies.
So, I mean, in the last 10, 15 years, India has moved a lot. The conventional regulators like SEBI or MCA, they've moved a lot on putting in technology, etc. So, how are we? Are we in a position to leverage what they have done, and also to add something more in terms of because we have seen a lot of changes in India itself. Even from MCA directors, removal of non-compliant, etc. I mean, just based on using the technology and using it rather quickly. So, just to get your thoughts on how this experience, because India, if we have the experience of India, we have like so many data points and all kind of things. So, it's quite a rich experience. So, how has been from that point?
See, tech has been a very strategic differentiator for us, right? So imagine a time frame where you file an application and you have no clue, it has gone into a black box, and then there are people visiting the offices, running from pillar to post to know where my application is stuck, correct? To a situation where you have an online filing, you know exactly where it is going, right? That's from the consumer or the public facing side. Now I'll give you the inside story, right? Inside, whether you like it or not, we have internal circulars which says these kind of applications has to be processed within so many days. Now, if it is a paper-based filing, tracking the number of days itself is a big exercise. So nobody tracks it. The moment it is an online system, it's very easy to track. There are reminders which go, there are escalation emails which go to the highest levels that this is breaching stuff. So which means even internally people will be on their toes to clear the files, to ensure the applications are processed, right? Unless there is some red flags, right? You found out that some of these people, they have some red flags in some databases, so you might take extra time to do it, but generally you can't sit on a file, sit on an application. So net what I'm trying to say is, through technology the governance has actually improved leapfold. It's unimaginable as to what, you sitting on the other side, you can't imagine the kind of things which has happened on this side unless you have been part of that system, been at the receiving end sometime back. Right? So probably for this generation, for they might not even know, like the way you said, we leapfrogged the initial stuff. So we didn't even have wired phones in our places, but we are leading in the wireless handsets in the world. We leapfrogged, right? So like that, we are leapfrogging on every aspect, and even governance, because of tech, is not an exception. We are doing pretty well on that. It is not just us, it's every government missionary, right? At the highest levels, it go to the prime minister's level as well when they're tracking things. So all of it has got a great impact. So it is not that it's only IFSCA is doing, it's across ministries, across regulators. Even RBI has moved to an online system where they put in all the stuff. Almost everybody is there now. So I think tech has made sure, we deliver on time. Of course, I'm not saying everything is hunky dory, but if you look at our SWIT statistics, I don't want to say the numbers in public, but from a 3-digit time frame to close applications, it's come down to a very low 2-digit
In terms of months or days?
days.
Oh, what? Wow. Okay.
Yes. So
You almost never hear days.
yes.
Yeah, as the unit of measure only in the first place.
So we have seen how the tracking has reduced it. Straightforward cases are, I know of cases where on the same day they have got the approvals when everything was in a particular category. It cannot be the same for all categories because each is different. One size does not fit all. But that has been the speed, because look at the time it takes to set up an office in Dubai, or the approvals to get in Singapore. So IFSC is getting benchmarked with international standards.
Yeah.
So I can't take pride that, oh, I am slightly better off than something here in domestic. We are always being benchmarked there, and we have to keep up with that.
Yeah. So I think we've kind of covered. We maybe as an economy we were a little left back, and now we've done a huge catch up with the rest of the world. I don't know if you'll agree with that, and we are there now. Let's look at the future now. So let's ratchet up the temperature a bit. It's a bit cold, but let's ratchet up as well. So I want to take a couple of statistics on looking at future. So I have this thing from MIT Tech Review, which talks about, are we ready for AI agents? Is the time now, right? And there was something about, I think yesterday Jensen Huang talked about how AI is becoming relevant for $100 trillion world economy now, and a lot of it will eventually be agentic, in my opinion. But I would love to hear your perspective on that, and also maybe just as a quick follow-up question to that, so that you can take both together. Is I think So the recent Nobel Prize in Economics went to a guy who wrote this book. His name is Joel Mokir, and he wrote about how innovation actually gets driven by a bunch of factors in a very beautiful way. And it's a book worth reading. It's called The Gifts of Athena, drawing from the Greek history. I hope someday we come to the gifts of Saraswati, I guess. But are we? So the question there is, what's your view on the AI agentic future as far as India is concerned, including IFSC as a gateway to the rest of the world? And then, are we doing enough to build a knowledge economy, which is what that's going to be what the 100 trillion economy the globe is, or the 10 trillion economy that we want to be in, let's say next, I don't know, half a decade to a decade.
Yeah, and for this, I would love to hear their views as well, because they are the tech guys too. So from a regulatory mindset, see, for us, we are always tech agnostic. To be honest, we never say this is the tech which we are going to kind of side with or bless with or something. See, for us, at the end of the day, we are a financial sector regulator. If what you're doing is going to help the financial institutions improve their productivity, help them grow in their business, we will just look at from the lens of financial stability, you know, customer protection, like the usual stuff, market integrity kind of things, and then go about it. But AI is unlike other tech, where it can hit all these three pillars also. I'll give you some examples. Like, say, if there is an insurance company which is using AI to underwrite insurances, and if the goal is to maximize profit, probably they might not give health insurance for people who are above 60 years old, isn't it? Because that's where the most claims will come and my profitability will go for a toss. So, no, see, it can be, I just said 60, it could be based on a pin code. People from this area I don't want to give loans, for example, right? Because I think they might not repay, or it could be anything. Yeah. Now, as a financial sector regulator, that concerns me. How? Because the consumer is getting affected. So, from a consumer protection angle, from an inclusion angle, I see a red flag going up, right? Similarly, from the data, we know data is the basis of training all the models. What kind of biases coming in? The usual stuff we are also worried about, because I do not know how many fundamental models we have in this country. I was in a police conference run by MHA. So it was about policing, right? So we simply asked ChatGPT give examples of that. They have done, Indian police has done amazing traffic management or other policing management stuff in Bangalore, Delhi, Mumbai. But ChatGPT will only talk about NYPD, something in Bay Area or something in London, because that's what the data has been fed, right? So nothing about Indian police comes up. Whereas the volume, the population scale these guys handle here is something of a different level compared to what you see in other places. You got what I'm saying? So there are all these aspects which I'm preaching to the choir. All of you know it. So our job as a regulator is not to say this is what which we are going to side or not, but the risks which come out of it, it shouldn't hit market integrity. Your algo tradings with AI, I do not know whether it will hit the market integrity. I'll have to see that. Or will something hit the financial stability, create a systemic risk? So these are angles from which we see the consumer protection. I gave some examples so that you understand. So we see that. But the way personally I see it is, there is no wishing away this AI genie or demon the way you want to see it. It is going to happen. Uh, how we tame it is what it is going to be, because the productivity gains which people claim in the agentic way, a lot has to be achieved. But from an India perspective, we are also tracking. I'm sure most of you know about the India AI mission. They're trying to build the GPUs, trying to get the sovereign stuff going, because that is also very important. I do not know how many of you knew that literally overnight, we moved from an Microsoft Office platform to a Zoho platform. You would have seen ministers saying, I have moved out. We are also part of it, all the ministries and all. Literally like that. And you won't believe, I'm not endorsing that per se, but I was very sweetly surprised to say that, some of the features they have are better than Microsoft. And I was like, why didn't we not know about this? Right? So I think we have the ability to surprise ourselves. But in the AI space, there's a lot more work to be done at the fundamental level and also at the application level, not just build some wrappers around the existing, you know, GPTs and others, only to be extinct when those guys incorporate that as a new feature. So I think we need to fundamentally redesign some of those things and use AI. That's my point of view on that.
Yes, I mean, not too different. I think the biggest change, at least especially in the space we think about more actively around numbers, is where I think will agents be the future? I think that to me is a little further away, and I think I'm sure regulators will have a role also in play in that sooner or later, saying, listen, you're touching numbers. There's no AI that's supposed to touch it, right? There's it should be people, humans clicking, taking decisions, entering OTPs, etc. That's what I'd expect. But I do think it's really important, and it can play a very significant role, and it's expected to in a lot of other ancillary aspects of when you're dealing with at least from a money perspective, right? Whether it's investing, whether it is banking, whether it's insurance, etc., right? And I think like again, underwriting, because finally it does become a numbers conversation, might be harder. But onboarding typically tends to be an area that a lot of agents I can see playing excellent roles to actually improve the experience that most companies are able to deliver to their users and customers. I also see it being very helpful, and this is now well documented. I think there are banks in the West who have taken their customer service, cost down to a fifth, and their satisfaction scores have gone up by 25-30%. So I think if you have well run agents, I think they can play a really good role in helping be available and help customers and users at all times. I think there's certainly areas in this space that we operate in where agents are going to play a massive role. I think then there are some areas where I think we may want to have them be maybe even a guide, but not a decision maker, not a final action taker. Is sort of at least still the way I'm seeing it. But I think maybe in the next few years we'll learn a lot more. I do fully agree that I think having more access to great quality sovereign models and sovereign data is going to become really important for all geographies, and it's well documented that this is becoming the new race that everyone's trying to win, right? And every country should start thinking about how do we take care of our own while being part of the global landscape as well. So I think that's going to be very, very critical, and it's exciting. I think that while to what the point you were making earlier, right, which is that yes, we may have not been built, may have not built the first models, right? But I think credit to sort of the global research community where we are now building the next many models, and I'm seeing this across voice, video, not just text, right? And I think that's exciting to see. I'm seeing some really exciting companies I have come across in the last 6 months in India who are operating in this space, and targeting initially in Indian companies, but have very big global ambitions, because what they're sort of doing is that again, how do you not get anchored to one of the big three, and how do you start to make sure that even as a customer of these models, you are ensuring that you are looking at a much wider data set and a much wider you're de-risking yourself. So I think there's definitely a lot of room out there that India is, I would not, maybe fast following is not the right phrase, but certainly very, very quickly playing a parallel role to all the global peers. So I think that's very, very exciting, the role we're playing. And at least I've loved seeing the journey we've started on, and we're sprinting now, even though maybe we started a couple of years later. But yeah, very, very fun to see.
From a point of view of investor, one of the things we have seen in India is that across jurisdiction you get different orders for the same inputs. So with one of the things which I see very exciting with AI is that you can start having a very consistent level across cases. And for example, like suppose you have 50 assessing officers, and if you give them 50 cases, same 50 people, the same case, they may come up with slightly varying But if you use some agentic thing to assist them and kind of put guardrails on that, then you'll start achieving a very high level of consistency. Now, what this consistency will give to assessees and participants in the system is that it gives a very high level of predictability. Because otherwise, somebody just sends you a notice and then that is there, it doesn't go. So this is a very interesting this thing. The other one is that which is there in the income tax bill, which is being proposed or passed, was that before this thing is get that it is run through the expert panel, and then the expert panel feedback is incorporated into that, and then if this is done through AI, then it sets a benchmark for the quality of the orders. It will kind of lift up. So I think that the regulatory framework, if you use this, will achieve a very base level will be set, which can be quite high with the speed at which it is moving. We have seen in the last 24 months, it's moving at a very rapid pace. So this can be a very fantastic thing. And if we see the experience of India, we start slowly, but suddenly we start learning and running very fast. So that's what is exciting, because then India will suddenly be from a place where things are used to be unpredictable to a place where that it will give a very high level. So that's what's very exciting about it.
Yeah, I completely agree. Only thing is, it should not hallucinate, so that when we do regulations and other things, we should not go into unknown territory. But this consistency is the right thing. In fact, the Global FinTech Festival, which happened in Mumbai, some of you, in October, after the launch of that FCSS, I do not know, the foreign currency settlement system, we had a closed door roundtable with the FM. So in that again, this consistency was the word which came in. That you don't want uncertainty, right? At the end of the day, the global investors, everybody wants a certain thing, and that is what some of these other jurisdictions have done very well, right? They'll say, okay, for 50 years, no tax, right? Or I have tax, it's at this percent, 15%, and that will be that for a long time, right? So that is something which is there. But I hope all of you know about the FCSS, which happened, the significance of that, because like the way I was talking about IFSC and what it is, that's also another very recent significant thing. Yeah, so for those who don't know, what it means is, in simple terms, uh, you're settling US dollars in India at Gift City. So typically the way it is when you do a transaction with respect to your rupee, the banks finally do RTGS with RBI, and it is settled on the books there before it reflects for the banks. So today we are all used to UPI, and RBI's RTGS and EFT all runs pretty well. So you don't really see the difference. But in terms of cross-border payments, if you're sending money, right? So now assume there is a Bank of Baroda in IFSC and an ICICI bank in IFSC. Now, if the Bank of Baroda in IFSC, which has dollars, US dollars, has to move that dollar to an ICICI bank in IFSC, which also has a dollar account, it is not a straightforward move. They have their nostros, because it's US dollar. It goes to the US, from there to the Fed Reserve, to this bank's nostro, from there to here. It takes easily 2 to 3 days to move $10 from here to there, or whatever the amount, right? So that's the time it takes, even though they are just right across or in the same building. You're in IFSC itself, because the currency is not ours, because the central bank is not ours, it's foreign currency. So what we said, hey, we need to make sure it's easier for the cross-border payments and others, like the way we're trying to innovate, right? So we said, why don't we do local settlement? So we got the permission from Fed Reserve. This happens in Hong Kong, Tokyo, Philippines. There are only very few places where it happens. So now the settlement bank, we got Stanchart to play that role. So they will do the local settlement. So all the daily transactions will happen in 2 to 3 seconds instead of 2 to 3 days within those banks. And end of the day, Stanchart will settle it with Fed Reserve, so that the liquidity they provide to this thing. So
How is this cross-border? This is still USD to USD, right?
no, so you're in foreign jurisdiction.
Correct. I'm saying it's not money from a GBP coming to INR or INR to the GBP, right?
Huh. So the moment you get a domestic transaction coming into IFSC, right? And if they INR to dollar, and then the recipient is in some other bank's thing, then the same thing will happen, right? And it'll take 2 to 3 days. Now, if I have a local currency clearing, immediately it can go, right? So now this is dollar, and we didn't name it as US dollar settlement system. We call it foreign currency settlement system, which means euro we are trying to do soon. So which means we'll have multiple currency which can get settled in India, and that is the zone of IFSC. So these are the innovations which are coming in. Just thought I'll let you know.
Question on this, that, when we study the banking systems, like in India, most of the transactions are related to our own economy. So our bank deposits and everything are in relation to our GDP. If you go to a country like Hong Kong, the credit deposit ratio or the bank deposit ratio to their GDP is very large. It's like disproportionate to the economy, because obviously, as you just said, that they were trading, doing many things, enabling within each other. So these kind of mechanisms, how would they deepen banking in India in terms of?
See, as I said, there are many levers. Simple, right? Today, cross-border payments, two key pain points. Takes a lot of time. Transaction charges are high, 6%, 5%, 7%, whatever it is, right? If from 2 to 3 days I can make it to 2 to 3 seconds, right? I mean, look at the liquidity you're bringing into the system. You need not be worried that the US is having a holiday. You can settle dollar here in the Indian time zone. So that's a game changer for you. Of course, the cost of transaction, that new technologies, newer companies will have to bring in so that the intermediary cost comes down from 6-7% to whatever they want to. But from a cross-border payments, speed, liquidity, MSME getting payments. I have delivered the service within 2 to 3 seconds. I'm getting the payment. Those are all game-changing things for you. And as I said, this is outside FEMA, right? So moving money from a US account to GIFT IFSC versus moving money from US account to a Singapore or Dubai is the same. But moving money from GIFT IFSC to Pune is like moving money from US to Pune. That's the difference. So if you are a cross-border guy in international jurisdiction, you're not getting into the FEMA thing. Money moves very fast, settlement happens there. The liquidity game is very, very different. Hope that.
So I'm sure all of us have lots of questions, but unless there is some burning question, I just want to kind of open it up to others who've taken the efforts to come from many places here, as well as key stakeholders. I can see one hand up there from my co-conspirator in AI development, Vineet. So maybe you can start, and then we can have others start ask questions. We can take maybe 3, 4, 5 questions. Yeah, maybe one question per person only. But thanks.
Hi, my name is Vineet. I'm a senior developer at Vayana. So, so there is one aspect which we've been fighting with when with specifically around AI technology or even Web3 technology. The aspect about data residency, the rules of the mainland in that sense ask us to actually hold financial data, financial transactions, and all such implications within the within the geography. And what we are dealing with is that on topics like AI, we don't have that sovereign model capabilities. We don't have multimodal capability trained on Indian languages, Indian content. So it's like trying to cross two gaps together. So one, on one side, you need that capability, but we don't have that in the from a mainland perspective, yet the law expects us to have that in India. is potentially a gift city or IFSCA, an opportunity there? Can we actually provide something for the mainland capability, and then through some sandboxes, through some regulation, ease that journey for Indian fintech, uh, to adopt AI and to have that capability built in India?
So maybe just to expand on that question a bit, so that you can give appropriate answer. So we keep trying different models, right? And we realize that none of the models actually are currently resident in India. None of the inference actually happens in India, and that's a fact which not many people, I think, know about, right? And if you want to choose a Indian data center, I guess you won't have access to most of the models today. So that's kind of the fact, and we can talk later about some of these things maybe after the session. But there are some serious issues, but at the same time, there are some serious opportunities. So I think that's the context.
No, that's a fair point which has been raised. Uh, I had a brief stint with the RBI set of institutions before I moved to IFSCA, so I understand what you're saying with respect to the data localization and other aspects. Um, so from IFSC, right, it's a different ballgame. We are very clear. This is an international zone, right? So cross-border data or businesses which are cross-border means data also will flow across. So I don't think we have any thoughts of saying data localization because it's international zone. So from day one, we are very clear that we cannot say data localization in terms of be within gift and all those stuff, right? But then, of course, there is a larger sovereign mandate, right? Where if it is a resident Indian's data, then it should be within the country, correct? Because in IFSC, it's not just going to be resident Indians' data; it could be other nationals' data as well, right? NRI, foreign, PIOs, whole lot of things. So it's not a one size fit all there, right? So that flexibility is there. Additionally, what we are trying to do is, of course, the DPDP Act is out. The rules we are waiting for it. That will also define and give regulators some leeway in terms of what we can do and what we cannot. We have made a lot of representation to MeitY and the secretaries in the government. But other concepts which we are toying up with is, I do not know if you've heard of a concept called data embassy, right? So data embassy is a concept where this actually had the origin with Estonia getting cyber attacks, way back in, I think, 2000, whatever, before 2015 times. They set it up in 2013, I think. So they got their data to be put into Luxembourg with a contract with them. Because we are all becoming a digital nation. So if there is a hack onto your identity data or the citizen related services and the governance which the government is trying to do, it should not get disrupted. That could be one. Second could be there could be wars, there could be natural disasters. You could be a small country with a rising seashore, line, so that your data centers can be at risk. So there could be multiple reasons where you could go to a trusted country and say, hey, can you host my data? And the concept of a data embassy is like your any other embassy here. So you go to a US embassy, uh, that area is US government stuff, right? Similarly, can we create an area which is a data center where the data which resides is of a specific country? So in the budget speech, the Honorable FM has said, let's explore data embassies in GIFT IFSC because it's an international jurisdiction. So already work is in motion for that. So it's a sovereign to sovereign now, right? So yeah, so it could be between sovereigns. So first it can start with sovereigns. So a country can keep their data here. Tomorrow we are thinking, can we extend it to multilateral bodies like IMF, World Bank? They will also have a lot of data which they want to keep around. And later probably we can even expand it to MNCs. So which means they can keep a European MNC. When they keep their data in GIFT IFSC data center in the data embassy, it will be compliant with GDPR and they will have full control on that. They need not be compliant with any other stuff because it's their data embassy. You get the drift? So that's in the works. That's something which we are trying to do. The other thing is, we are also trying to explore something called as data corridors. So today there is a lot of these data corridors between US and Europe, and within Europe, the entire Schengen, they share data. Some talks to see how can. So then there's a passporting. So for an MSME, if the company registration there is recognized here or vice versa, it becomes much easier for him to come across these economies. So a lot of such thoughts are there in discussion, but it'll take some time before it sees the reality. So that's where the IFSC, we are all trying to work to see what we can do.
Yeah, I think this is going to be an area that, given the speed at which AI is moving, given the speed at which AI is moving, it's going to be something that is going to become like a very pressing conversation very fast, as most things that, yes, there's a lot of, obviously factors to be considered, and normally can take a few years just to keep India competitive and so on. It might be something that have to be fast forwarded at AI speed at this point also, because that'll enable everyone to move and take advantage of that.
Yeah, but I think the good thing is, we are actually learning a lot of cutting edge stuff even on the regulatory side, right? And from a regulator. So we are clearly moving at, I think, hopefully that speed, the AI speed.
The regulators are supposed to lag behind everybody.
Well, okay, let's not say that. Yeah, yeah. And I think it's really, like, in a way, heartening to see that we are at least being aware of all the opportunities and all the challenges, and trying to chart our future. So, with that background, let me open it up to questions. Anybody wants to ask a question? If you can, uh, give your name and where you're from, and briefly answer. And I think people who are standing, please sit. There are some seats this side as well. I think we don't have to stand, please. Yeah, Rahul. Yeah. So we'll have to move that, right? Yeah. So you can. Thanks.
Hi, I'm Hitendra. I run a small family office based out of Pune. It's not necessarily a tech question, but I want to know that in the onshore framework, SEBI has been very guarded when it comes to outbound investment with strict caps on mutual fund level. What's the scenario when Gift City? I know funds are setting up, AIF structure is existing, but is it supposed to be still under some broad cap? Are there some restriction on that, or is it totally flexible?
So you said it very correctly, right? Funds, it's just flowing. I know 300 plus funds number is crossed. AFs, all those things are pretty good. Family offices, some of the big names have come to us, and I'm not saying any names, but also looked at it. But there are some, internal conversations, ministry and other regulators. See, the question is about like the way. Sorry. The question is more about everybody's looking at the same. So, okay, you have a zone here where there's no tax, right? So, if you're an AI company, I'm not going to your stuff, I'm just taking a general thing with the crowd here. So, where would you want to set that up? In Pune or in GIFT IFSC? If I'm getting a 10-year tax holiday. So, which means businesses will start coming from India, that is mainland India, to IFSC.
Even if they're doing business with other users or customers in India.
I'm coming to that. So that's the second part. So now, so ideally they'll prefer to come here because you have obviously a 10-year tax holiday. So that's when we put the question as to who is your customer. If you're serving India itself, you're raising an invoice in INR, then I won't allow you to come here. You better stay there, pay GST and do all the stuff, whatever you're doing. Because that's a loss of revenue to the government. I won't say it's like a round tripping, but are you trying to do something like that? Like, evade things by coming here. Correct? Now, if the same person is doing business with a US other client, then they're setting up here is still okay because you can raise dollar invoices. Anyway, you are not paying the GST kind of thing because the services are outside. And sometimes from there you go to Singapore or other locations to set up your office for that convenience. So you coming to Gift IFSC makes a lot of sense, because our overall mission is to bring back people who have left to this foreign jurisdiction, right? So that is the basic premise we are operating on. Now, when you take family offices, I'm making it very simple for the uninitiated, right? So what is this? Like Indian family offices, what of wealth? Now you want to invest it outside, right? So when they come to IFSC, there's a general feeling that, are they taking wealth out of the country? That's one school of thought. But there's another school of thought. If you don't permit it, anyway, they're going to Singapore and Dubai, other places. So that's another school of thought. So while this debate is going on, I'm sure it will reach to a conclusion very soon, but it does not reach. That's why you have this uncertainty with respect to family offices in the IFSC. So we went very fast. We got some very good names, but then these are the questions which are getting answered. But it will eventually there. Like the way I said, the video KYC thing. Everybody thought it's going to be impossible for us to crack that, because it's a PMLA, Ministry of Home Affairs, coming in, national security. We heard all those documents and discussions, but there is a way to go about it, bring sanity into the conversation, seeing the business part of it. So if you really see that circular which came last week, it has been crafted in such a way that it's not all open, but all the 10, 11 markets which are primarily for NRIs and others, we have covered. And some extra kind of uh, regulations or asks have been put in to kind of ameliorate this risk which people see from other. So like that, some middle path will be arrived, and we are very well aware of this family office challenge. So today it is not solved, but you can expect it in the near future. Technically, you should not, because the AIF will say who they are expecting and all those stuff, right? And where they're going to invest. So the AIF today can invest back into India, Cat 1, Cat 2, Cat 3, all those standard things. Correct. So the fund managers will clearly go as per the regulations. Probably, I don't belong to the fund ecosystem or that fund team who wrote the regulation. So I have the guy who wrote the TechFin and the other aspects of it. So in my sleep also, if you call and ask me, I'll tell you. Whereas the guys who wrote the regulations might be the right people to tell about the eligibility and all the stuff from there. But it's out there in public domain. Like it says for this kind of AF subscription, this is the minimum limit and this is the eligibility. These are the things. And they have made it a lot easier on some of those funds and AFs compared to some other jurisdictions. Since you're talking about this, there is also a lot of talks about the VCC structure. I know that's the logical next question. Correct. So the variable capital company structure is also getting debated, and I'm sure it's gone to the highest levels in the ministry for its final look. So you can expect some news on that as well in the days to come. So we've been working on it as well.
Little slow in relation to the appetite of the Indians to go out and take risks. Relation to the appetite of the Indians to go out and take risks. But the RBI or allowing the Indian investors to take money out, either then individual investors or AIFs or so this has been little low. Is this because of regulatory, or is it because of the overall macroeconomic, or what is the thought process, and what can we expect in the coming? Yeah, so it's just
See, the macros, see, at least from a economic perspective, India is pretty strong. We know that. But outside, we know all the geopolitical situation which is happening, and tariffs and all those stuff. Like we were talking sometime back, a business model itself crumbling because students are not going there, kind of thing, right? So I mean, those are all something which is going to be beyond our control, certain in our way. But if you really see the way, let's say, RBI has come up with this, saying that if you're an exporter, you can hold money in IFSC for 90 days. Earlier it was lesser, in other jurisdictions. So now they're allowing you to hold rupee abroad, and more preferably in IFSC. So it's like, how can I internationalize the rupee? There are thought process like that, right? Now, all of these are something which will take time. You can't just like a flip a button and tomorrow it goes, because we have a tight balancing act to do here. Unlike some of the other city states who could do it very very easily, right? So I feel uh, things are going at a good pace, and the government is also very keen listening to all the feedbacks. In fact, I know today there was a lot of VCs with the ministries in our office about the proposals which we need to consider for the next budget. So already we are all burning midnight oil on all those things, right? Because this it's not a one size fit all or one entity can solve it. It's the whole of the government, whole of the ministry, whole of the regulators. Everybody has to come in. And second thing is, like the way I said, the video KYC came last week, but people might not be fully aware. People won't know that today you can open as a resident Indian a dollar account in Gift IFSC and hold dollars. There are NRIs who could open a fixed deposit in dollars. They're giving probably 4 or 5%. But the way the currency appreciation happens, they get a better return holding it in dollars than in your NRE or whatever the Indian rupee. So sometimes, more than the regulatory or the other levers, the knowledge, that itself becomes a challenge, and people are slowly getting used to it. So today, I know there is one platform in money who allows you to invest in US stocks from Gift. Similarly, Zerodha is going to come up with their own stuff. FSC means one risk is off your table. I can't solve the entire macro problem for you, but at least the hedging you might take for the currency risk, a few basis points, if I can save for you there, that is the flip you get. So like that, there are small levers all available put together.
Currency risk that what you're also taking away is the operational challenge of having to do this.
Correct. No, multiple
business better.
Yes. So I just gave that as an example. One small thing.
Now, because you don't optimize the cost, you have three people behind that to optimize the cost. And
Yes.
A small company that do this, exporting and so on.
Correct.
That's right.
So it's a kind of a chain reaction which goes in. So if you just unpeel it, there are a lot of, so probably the education part, this also came up in that roundtable where people are saying that, not everybody knows what all is possible here. You guys should set up a portal or some kind of place where all this knowledge can come in.
AI agents should start doing this.
Perfect. In fact, we did a small, we did a prototype for that with some people, but the only risk is, see, it was sometimes hallucinating. And when I put an AI agent on a regulator's website, let's say the gentleman there from ICER is asking a question, and if that has given a response, and if it is misleading, as a regulator giving a bot which is giving misleading because it hallucinated, is going to put us in more trouble. So that's where we are being more cautious on that.
So maybe we can have one final question from any of the younger guys. Yeah.
I don't understand much about sandbox of what you guys are doing, but from what I know, it's only available to a certain set of institutions, like financial institutions or something like that, or is it open to also universities and research institutions to work on that?
So I'm glad you asked that. That's an area we didn't touch upon in our conversation. So sandbox is very important because that's where innovation actually happens. So today there are PSPs in Gift IFSC because we created a regulation for payment service providers. But how did that come in the first place? Because 2 years back, we had a lot of applications coming in from PSPs into our sandbox. Okay, and then it was a clear signal for us as a regulator. Hey, the market wants this. So then I took it to my former chairperson, said, "Boss, this is the trend." He said, "Is it?" Then we decided to create a new division for PSP. That division had some few people allocated. The people then worked on the regulation. Now the regulation is out, people are applying, and they're giving now approvals, and PSPs are coming in. So that's how that innovation cycle comes in. Okay. So that's why the sandbox is very important. So what we have, the framework today, it's not, and that's why his question is very relevant, because when we launched that FE framework with the sandbox, it is not open to research institutions or universities and all. So because we had 4 different types of sandbox. Typically, a regulator has a regulatory sandbox. That is the most powerful one, because that's where all the relaxations are given. While the rules say so and so, as a regulator, I can relax it for you for that particular experiment to test that innovation. That's what it is. So that's the regulatory sandbox. But we created one before that called innovation sandbox. Difference is, in regulatory sandbox, you will do live transactions with live customers. There is no dummy. So when you're moving money, you're moving some real guy's money to some other place. So that's why we cap it. We say that, okay, you can do 10 transactions. It cannot be more than X dollars worth, and you have to complete it within 6 months. Whatever, some boundary conditions, as we call it, are done. Whereas in an innovation sandbox, it's all test or dummy data. So it's about bleeding edge thing, right? There are some technologies where we ourselves don't know what they're talking about, but we want to give them a chance because we feel that there is some potential. So with dummy data, you do it. So we had couple of quantum techs who came in. So we allowed them into that, right? We had a space tech who came in. So we allowed that. You might be wondering what is the space tech and all doing in our kind of an ecosystem. But I'll tell you, these guys were taking geospatial intelligence, solar flare intelligence, the space debris intelligence, and calculating what will be the life of the satellite, because the satellite's life is dependent on all these things. What happens if a space debris hits it? Maintenance. Solar flare goes off, its life can go. And what they're doing is they're taking the data and giving to an insurance company here to underwrite the satellite insurance better. So there was a financial link, and I was impressed. I said, okay, you come into our sandbox. You got so it's a tech fin, technology for the financial stuff. You got like that. So, but then I didn't understand it at first. I cannot allow him to do a live transaction. So, innovation sandbox like that. Then there are 2 others, which is some flavor of a regulatory sandbox. One is called the interoperable regulatory sandbox, where not only us as IFSCA, I get RBI, SEBI, IRD all coming together, so that if there is an innovation which is domestic and us, we can all work together. Because before we came as a unified regulator, there was this problem in India. I do not know, some of you might not be there or you might be too young. In 2010, there was this ULIPS problem. Is it a SEBI instrument or is it an IRDA? Is it an investment or is it an insurance? Right? So today, fintechs come with very interesting solutions that regulators themselves will get confused to say, hey, is it in my domain or his domain? Or her domain kind of thing, right? Because just think, no, a startup will come, they'll start with wealth management. Then they will say, okay, let me embed some insurance into it. So embedded insurance comes in. Then after some time, they'll say, okay, I want to be a neobank. So now what did you say? You started with wealth, SEBI, embedded insurance, IRDI, and now a bank, RBI. So whose sandbox will they fall? See, we are unified regulator. We don't have a problem. Anything combinations we will handle. But when domestic regulators are there with their own realms, it becomes a problem. That's why the IORS was created. But what is our value there? If a foreign fintech wants to come to India, they can come through us into the IORS so that they can get connected to the domestic regulators. So that's another thing, third kind of sandbox. The fourth is, we call it as overseas IORS, interoperable regulatory sandbox. So interoperable among the regulators. So that's a domestic, all 5 of us together, 4 5 of us. Then the other one is called overseas referral regulatory sandbox. So overseas referral is so with MAS, which is the Monetary Authority of Singapore, the unified regulator there for Singapore, and us, we have a fintech cooperation agreement. So which means it's like a fintech bridge. So you want to go to Singapore to do business. Now, from college, you go there, you will figure out whom to reach out to and all those stuff. But with this, what happens is if you come into our sandbox and you meet the criteria, then we directly refer you to MAS. Straight. It's a red carpet. It's a fintech bridge. Similarly, fintechs in Singapore, MAS can directly refer to us so that they can come to India. You got the drift? So like that, there's 3 or 4 which we do. So that's why we kept it at a very high level. We didn't permit university and all to come in. But now we had launched for public consultation a new framework called Fintech Sandbox Framework. Correct? Fintech Sandbox. He's one of the architects of that, sitting next to you, right? He's footing it up. And in that, we have opened it up for universities. Correct? So we have got public comments. Now we will take all of those into account. We'll put it to our board, the authority, get the approval. So most likely by December and January, the new framework will be out, whereby even universities can get into all of these 4. So it's coming. Give us some time.
Very nice. Nice to hear the timelines also in the order ones.
So I said that because I know December we have the authority meeting, and as soon as we need to put it up. So he's doing all the work. The guy is sitting there next to him. Right. It's all in his hands. So, and I know he's completed the heavy lifting. So it's internal process, and then
So I think I'm sure there are more questions, but we can take it up after the formal session. So let me just bring this to a close by quickly summarizing. I think we started with your very notable quote that India has arrived. I think that will remain in my mind, and I kind of agree. There's a lot of work to be done, as we all talked about, and it's heartening to see that both the industry and the regulators are all at it at hopefully AI speed and talking in weeks and months and seconds sometimes, etc., etc. And the universities and others, stakeholders across are going to be kind of working together. So it's a great place to be, and I think let's keep this going. I think this was the first session for our YouTube live as Vayana, so everything is first. And thank you so much for giving us so much time. I think it's been more than an hour that we've spent, but I learned personally a lot of things, new things. Despite knowing you long enough, I learned, I think, double of what I know, and I'm sure that's true for most others as well. So on behalf of everybody, I'm just going to request Vaishali to present a bouquet to Joseph on behalf of the co-panelists and everybody here as well. Yeah.
Thanks a lot, sir. It was very enlightening.
Hopefully you picked up a few things.
Sure, sir. Definitely a lot.
Thank you.
Thanks.
And we can have Madhura. Oh, okay.
We're also
No. Yeah, exactly. Very piercing questions. Yes. So Pradnya, thank you. Dipanjan, yes. So Dipanjan is our CPTO as well, and so he's your equivalent here in some way. So thanks. All right. Thank you so much. Thank you, everybody, and we'll have some refreshments. And please feel free to raise questions. Continue if you have some time. Few minutes.